Morning, everybody. It's the 13th of October. We are Signal Centre Talking Ball. I'm Joe, joined by Steve and Taff this morning. Good morning, gents.
Morning.
Hey,
How
Joe.
you both,
Steve.
how you both doing?
Hey, mate.
Good.
All right. Happier today, Steve, after that 7-1 demolition yesterday?
Yeah, a bit disappointed with the one goal, but I had
It was the
5
first
0.
goal as well, wasn't it?
I backed 5-0, and so that
greedy.
sort of disappointed me even more. I was fighting, yeah. So
Yeah, a 5-minute hat-trick's always nice as well, right?
yeah, not bad, is it? Not bad.
No.
Need to do it in the league though against Man City.
Yeah.
That'd be good.
That would be good. Is that who you got this weekend? It's Sunday's game, isn't it? Wow. Okay.
If you can do that, and we can try and hang on, then like most teams against Man City.
Excellent. Okay, right. Let's get stuck into the latest news then, shall we? And it was pretty quite well. I mean, it wasn't huge amounts of moves in the markets yesterday, but we'll have a look at the headlines nonetheless. So in terms of the US PPI inflation, that was marginally lower, increased 0.4% for September after the 0.2% decline the previous month, taking the annual rate slowing to 8.5% from 8.7% and slightly above consensus forecast. Underlying prices increased 0.3% for a second successive month and in line with expectations, with a year-on-year rate slightly lower at 7.2% from 7.3%. Long-term opinions within the Fed minutes were split yesterday. Minutes from the Federal Reserve meeting stated that many participants consider the risks of doing too little outweigh the cost of doing too much. But there were also comments that at some point it would be appropriate to slow the pace of rate hikes and assess developments. Several members emphasized the importance of maintaining a restrictive stance for as long as necessary, but this was countered by other comments that risks would become more two-sided as policy became more restrictive. There was some evidence of splits over longer term policies. So started maybe to see the US guys on the Federal Reserve side start to think that really that the rate hikes are maybe too aggressive and they could maybe pivot, which is what it seems many market participants are looking for. We are off to a weaker start with most of the indices this morning, so it doesn't appear to have any huge effects so far. US dollar, Japanese yen posted fresh 24-year highs again yesterday. No evidence of a significant policy shift was on exchange, with the G7 and the underlying yen sentiment remained weak on yield grounds. We've got the US CPI data today, which is going to be very well watched. We've got the consensus forecast for a headline increase of prices of 0.2%, with an annual increase slowing to 8.1% from 8.3%. So 8.1% is the big number that we need to watch. That's the consensus forecast for inflation. If numbers come in above that, then obviously that would indicate that inflation isn't slowing down for the time being. So strong data would likely reinforce the Fed's hawkish message and tend to reinforce dollar strength, while weaker data would provide at least initial relief for risk conditions. In terms of the Bank of England, the chief economist Peel stated that he was still inclined to believe that a significant monetary response will be required at the next policy meeting due to significant macro and market news in the past few weeks. He added that the government policies must ensure that tax cuts and higher spending do not threaten finances or effectiveness of the Bank of England over the medium term. So, more unsettling really in terms of the Bank of England and what the government are doing. So yeah, quite a strange time for us in the UK at the moment. So let's move on to some charts. So today actually Taff's going to go through the commodities and Bitcoin. So if you're right to kick us off, buddy, that would be great.
Perfect, man. Let me just share my screen. Okay. All right, so I'm going to kick it off with gold. We'll start off with the daily, see what happened yesterday, what we envisage to happen today. All right, so gold, yeah, we're pretty much in this channel here, this bearish channel here. Yesterday we had a bit of a bullish candle, but it was capped by the resistance that you're seeing here. It'll be more elaborate on the intraday. So let me just go there and see what could probably happen today on an intraday basis. All right, that looks a bit more clearer. So we had this resistance, this channel boundary here up here. We kept price here, and price broke this level here. We went down, and now we seem to be ranging between this first resistance and first support here. But you can see that we've got a this is a very weak trend line here. That's connecting this high here and this high here. And what I envisage to happen is probably price coming down, breaking our first support here. On retest, I'll be looking to take the second support at 1640, and ultimately the ultimate target for the shorts would be the zone between 1615 and 1620. So that's for the bearish view. For the bullish view, price could come down to the first support at 1661. Support could hold, and then we could have bullish momentum come in. We could break the weak trend line that I just talked about. We could break the first support, first resistance at 1675, and then you'll be looking to target the second resistance at 1695 thereabout, and thirdly, the third resistance, which is the channel boundary, upper boundary here. So those are the two views on gold that I have. But my bias is to the downside. I'm slightly biased to the downside. I'm looking to break this and then going down. That's on gold. Let's go to crude oil. Crude oil, I think we were retracing a move that we saw from from right about here, the 27th of September. I talked about crude oil and the macro behind it, and basically my long-term view on this, if you're going to be swing trading it, my long-term view is that I think prices are going to eventually go higher because of the supply shortages that we have. And if China comes back out from the zero COVID policy, then obviously demand is going to go higher as well, and that will just exacerbate the momentum that we'll see there. But that's on a longer term view. On a short term view, I'm looking at price testing a 50% fib from this low here to that high there, this zone here. Let's go on the intraday to see what exactly it looks like, really. So we had this impetus here from this low here. Price just kept going higher and higher. We had higher lows, and we reached the highs of, I think, 93.46. So from there now, prices now we seem to be retracing. And my first support level that I would like to, if you're going to take along on this, is probably the second support level here, which is, I think, 90, 84, 91, 84, 50. It's a zone here. I think this is my money spot for today. I would want to see price break this weak support that we're seeing. You can see that already. We have a bit of rejection here. Price is failing to break this weak support here at I think this is 87.21. If we do break it, then I'll be looking to take longs down here in this yellow zone here around 80, 84.91, 84.50. If this breaks, and then really the third one here on an intraday basis will be around 83.21. That's for my bullish view. For the bearish view, if, as we're seeing right now, if this candle persists and then we have bullish momentum, I'm looking for price to be capped by the first resistance here. It's a zone, I think, 89.44 to 89.95. I really don't see price going further than this. If price comes here and then we see rejection on the rejection candle, then I'll be looking to take shorts and possibly take some off on the first support, and then ultimately the second target will be the second support here. So for today, I'm really looking for price to play between the first resistance zone and the second support zone, with the second support zone being a 50% fib retracement for that bullish move up there. And for the bulls, really, this is your money spot. Let's go to nat gas. Nat gas on the daily. I talked about this strong trend line here that we had stretching from January this year. It was respected in January. In January, it was respected in February, respected again in July, and then we seem to be respecting it again here in October here. So it's quite a strong support trend line. So on an intraday basis, I would expect a bit of bullish momentum to respect that. Let's see what that looks like. So Steve said this is a complex inverse head and shoulders formation here that is forming, because it seems to have multiple shoulders, and then we've got like a double head there, and then we've got this right shoulder here forming. I think it's got three shoulders here, but the bottom line is the trend line that I talked about. This trend line here, this is the trend line zone. Price seems to be respecting that. So I expect this bullish momentum that we're seeing here to probably continue. We've got a weak resistance here at 6.86. We could probably retard a bit here. The momentum could be retarded a bit, but my ultimate target probably on an intraday basis will be the second resistance here. I don't see price breaking this and going higher than this unless some news comes out and we have really strong volatility. So for today, I expect price to be kept by the second resistance and the first support here that we have, which is our trend line on the daily chart. So yeah, this is my view on natural gas. Over to you, Joe.
Thank you, Taf. Super roundup there. So let's take a look at FX then, and Steve can then cover the indices. So starting off with the dollar index, not really much changing yesterday. Still, obviously, very bullish. But if we look at yesterday's price action, we can see it was very muted indeed, posting that doji candle. A little bit of upside already this morning, but overall the trend still remains very positive. So we are looking for higher prices. Of course, we are going to encounter resistance at this previous swing high that we posted on the 28th of September, which comes in at 114.77. If we break above that, then the next level of resistance to target is at 116.76. So still looking pretty strong on that front. In terms of Euro USD, that continues to trade within this bearish channel. No signs of that slowing, although price action over the last couple of days has been quite flat. A couple of dojis been posted there, a little bit of indecision. So are we starting to see a little bit of stabilization in price? Are we going to see maybe a push to the upside in the short term as a result of this, or are we going to re-challenge these previous lows? So again, it's all really comes down to what the dollar index does. And with that CPI number due out today, it could be the day where we do start to see a bit of follow through in either direction on these FX markets. Looking at cable, obviously tough times in the UK at the minute, but we posted what you could argue was a bullish engulfing candle yesterday. There was some intervention yesterday by the Bank of England on the gilt markets. They left it till quite late in the day, but there was record purchases of gilts made yesterday. Lots of volatility in those markets, and of course that's impacting the currency as well. So not really too sure what to do with this in terms of sort of trying to trade it. I mean, it really is kind of stuck between this major support level down here, which we printed on the 26th of September, and this swing high that we posted on the 5th of October. So until we can break out of either direction of that, it may be that we're going to see continued volatility within that range, and it is a fairly substantial range at that. We're talking what, nearly 400 ticks or more. So yeah, it's gonna, I don't really know what to say with that, to be honest, at the minute. So do be careful if that is your weapon of choice when it comes to trading today. Let's take a look at dollar yen, because we saw fresh 24-year highs on that yesterday. A clean break to new highs above that resistance at 145.90. No signs of it slowing down. A little bit of indecision so far today, but I think it's going to be all eyes on the CPI number, which is due out at 1:30 later today. So in terms of the currencies, unless there's there is a request to look at sterling yen, so let's do that. Okay, so sterling yen looks to be trading in a bit of a range. Obviously, we had these big dramatic moves to the downside, which was stopped at around 149 on the daily charts. We got back within that range, and prices continue to chop around in here. Yesterday, some pretty positive price action, engulfing all of the losses that we saw on the previous session, which is an encouraging sign. In terms of upside, obviously, we've got this major level of resistance up here between 167.94 to 168.43. So until that's broken, I would expect prices to continue ranging within this this setup here. So the lower end being around 155.59, arguably, but it's not very clean any longer, because we saw this big dramatic move to the downside. So while yen continues to remain very weak, I think the bias probably is for higher levels for the time being, especially as we've got the Bank of England kind of intervening in the market at the moment. But I think any upside advances are likely to be capped into this region here. So hopefully that helped, Fadi. If there are any other requests on FX, let us know and we'll come back to it in a moment. But until then, I'll pass on to Steve and you can run us through some indices.
Thanks, Joe. Just share my screen. Okay, I'm taking a look at FTSE first today. Now, FTSE, this is the weekly formation. Just a quick reminder of what's going on here. We've got a double top here, which is a neckline at 67.70, and a double top here, which we've broken the neckline, and we're trading below it now. So, for me, you can see how pivotal or how important this support line has been, going all the way back to May 21. And we are currently trading just below it. So maybe an early sign that FTSE is really under pressure amongst all of the indices, and good potential for a break to the downside. However, look at what's happened the last 4 or 5 times we've hit this level. We've reacted aggressively higher. So a key moment in FTSE trading today. From a trading perspective, yeah, you could sit here, maybe stick a few longs on, have a really tight stop, or go with the break, go with the flow below. You stop, it's a little bit more of an aggressive trade because your stop has to be a bit wider, maybe up above 71.10. But yeah, that looks quite promising on a sort of like weekly basis for the downside. This is what it looks like on a daily chart. Again, it's a retest, and last time we got down to this level, we formed a bullish hammer. Really, the only sort of like real sort of positive candle we can get out today is a full engulfing move from yesterday's price action. As I say, a break of 67.83, and the market is under severe pressure. We're seeing similar sort of price action in the DAX. This is the hourly chart in the DAX, and we can see every time we get down to this 12,100 level, markets bounce. We're seeing a little bit of the same here right now. We've just hit 12,100 and price action is moving higher. However, the lows are higher as well, and we are in this sort of descending triangle formation. It's not a great angle of descent, so there may be a little bit of a bit more to play out. We really need to get another contact point here to make it a full trend line. So a break above 12,220 is something the bulls will be looking for, and the bears should be a bit concerned if we do get a break above there. But more specifically, a break above 12,300 negates this pattern and probably does result in multiple double bottoms forming. So definitely, again, another real level to watch. We're at quite pivotal levels. We have been for a number of weeks now on the indices, and they seem to be holding, but it looks very fragile to me at the moment. Similar sort of price action. Looking at the Dow on the hourly chart, I suppose you could say we've got potential for an inverse head and shoulders. Just looking at it very briefly here, but it's a bit of a messy one. I wouldn't really like to sort of like, I'd rather sort of like draw it like this. It looks a little bit better. But again, it's a bit more complex, multiple right shoulders, multiple left shoulders, and yeah, a bit more to play out. But really, the key level to watch for this, a break back above 29,600 would be positive, but really go with the flow below the 28,920. And Nasdaq, take a look at that. The tech sector under a little bit more pressure, and again we've got this almost descending triangle formation, which has momentum is to the downside, so we expect a downside break. But normally when you get triangle formations, it's a 50-50. So the trend only counts for a certain amount, and it has to happen quickly, and it's not really happening quickly, so becomes a little bit more difficult to trade. Support coming in at 10,713, and resistance really for me a break back above the 11,000 level, and it takes the pressure off for a short period of time. S&Ps, similar price action. The level to watch, 35.68 on the downside, and up above really, I suppose we've got Nice trend line coming in here. Maybe got 3 touch points, maybe more than that. Multiple touch points there. So resistance coming in at the moment around about the 3,600 level. So yeah, maybe expecting some sort of breakout on these indices one way or another. I've been like small short of DAX for a long while now, and it just doesn't seem to want to break. So doesn't feel great. Other markets we can quickly look at. Just on a longer term basis, levels to watch. Get rid of that. Yeah, the key level really we had was the 14,500, which I talked about for months and months and months and months and months till we finally broke it. We came back, retested, and it did reject, although it did sort of make us work for it. There was a big area of resistance here. Now support coming in at this level here down at 12,288. We've got very close to it today. If you look at the long-term trend line that goes all the way back to 2014, 1, 2, could call it 3 maybe, but definitely 3 here, 4 touch points here, and we are trading below it. So a break of there, and it does look pretty ominous for the China 50. Is the economy going to re-kickstart again? Probably not. 61.8% fib retracement down at 11,740. That would be the next test level. Below there, it's fresh air. Almost feel like a poet. That's about it. Yeah, I think I've covered the main ones, unless there's anyone else who's asked for an indice.
No, I don't think so. That's all good. So let's move on to the gun to the head challenge then, shall we? So this is where 3 of us pick trade ideas live on the video in the hope that we can make a bit of return between now and 9 o'clock UK time when we close them out. The trades will either close when they hit their stops or their targets, or the 9 p.m. Cutoff. All the trades are placed at market, and it's just a bit of fun. So let's see if we can pick a couple of winners today. Just in terms of yesterday, let's do a quick roundup on that. How did I forget?
Yeah, let's do a roundup of that.
Yeah, let's do that. So on our profile, signal_center, you'll see our trade ideas published up as soon as we post them. So yesterday, I was looking at FTSE 100, trying to, see if it was going to break down through this 6822 support, and bit of a wobble initially, but eventually it got there, and it is starting to move to the downside now. So at 9 o'clock yesterday, I was half an R on side, or 0.59 R on side on that. But Steve stole the show with his trade on oil. He was looking at a possible head and shoulders formation, which looked as though it worked out very nicely. He came very close to that stop, but in the end, went on to hit the target, and pretty much to the pip. So well done to you.
Well done,
That's
Steve.
2.5 R win.
I was just copying Taft's idea from the previous day, so it was. I should sort of like at least give Taft a mention in that.
Yeah, absolutely.
Yeah, I deserve an R, 1 R from that.
Yeah, you can have 1 R. Give him 1 R.
Definitely got the assist on that. So right, new trades
today.
today.
What's the overall thing looking like, Joe?
Let's have a look, shall we? So this is the spreadsheet that we've got. So this is the one that we want to look at, because it's since we started back in 2019, and since then over 700 episodes have passed. Obviously, we've got to a very good start with the Gun to the Head challenge before we then went through a period in the doldrums. Things have started to accelerate really since December, January this year, and then we've continued to move to the upside, and we're coming close to our previous all-time high with that uptick that we saw yesterday. So certainly looking pretty good overall. All of these trades are mapped on spreadsheets, and it's pretty complex, but it is all there, all called live on the videos, and yeah, it's not been too bad. So hopefully we can carry on. Taff, you got one ready?
Not really. I had one, but I'm just thinking the risk to reward is not looking too good.
All right, let me go then.
Just
While you
1
guys
minute.
take some time to find some ideas. So I'm looking at New Zealand dollar versus the Canadian dollar. So looking at the daily on this, pretty horrible downtrend, as you can see on the chart here. So certainly the bias remains bearish for me, looking for opportunities to sell into that. And if I was looking at it on the intraday basis, we can see a decent rally in the very short term into a 50% fib level, and also a horizontal resistance I've got here as well. So we posted a bit of a turnaround over the last hour. We're trying to recover some of that as it stands at the minute, but for me, I want to sell this, expecting really a break of this channel and for prices to continue to move lower back towards these previous lows that we posted on the 10th of October. So I'm going to sell that at 77.47. I've got quite a tight stop loss at 77.67, so only 21 pips, and then looking for a target down to 76.24, which is 122 pips lower. So looking for a 5.82 R return on that one today. I've got it all marked up, ready to go. Yeah, quite like the look of that. Certainly very much trading in line with the dominant trend. Let's see how that plays out. I'm going to get it published right away. So if anybody wants to follow that, please feel free to do so.
Lovely.
Steve, you got one?
Yeah, I got one. I'm going to look at DAX 40. Go with what I'm feeling at the moment. We've seen a rally over the last hour in nothing of any great shakes, but it gives me an opportunity to sort of get involved in this. Let me think about risk reward on this. Now, this could be a bit of a humdinger. If we do manage to break the support level at 12,100, I think we could be a bit of a collapse committee. Let's try and get some fibs drawn in. Yeah, well, let's go for the full retracement. Why not? Let's go for a really aggressive sell-off. Don't know what will cause it, but yeah, I quite like the risk reward of this as price action has moved up in the last few minutes, really. Well, last hour. So selling GER 40 at 12,187. Targeting a move to 11,837, and the stop is at 12,257. So I'm giving it a little bit of room. 770 ticks on the upside. Looking for a lovely 5-to-1 risk reward. That would be nice.
Lovely.
Very nice indeed. That would certainly get us somewhere close to that all-time high on the P&L. Taff, over to you.
All right. Yeah. So I think I'm going to stick with the nat gas. I'm going to put my bet that this trend line here, a very strong trend line on the daily, will be respected. Already we're seeing a bit of bullish momentum. Obviously, I think price will probably come down, but I don't think it'll come down to take my stop. So I'm going to buy the market and target my resistance zone here, the upper band. So I'm buying at 6.729, and my target is 7.282, and my stop, I've just put it just slightly below the trend line at 6.503, with a risk to reward ratio of 2.45.
This is my favorite one of all the markets we've analyzed this morning. I really like this because you've got the long-term trend line supporting a real short-term potential reversal. So I really like this. My favorite patterns are head and shoulders, whether it's inverse or not. Just bring on that chart, bring the graphic into 9 o'clock on the right. So grab the right-hand side of that graphic, the other side.
The other side.
Okay. All right, cool.
And bring it into 9 o'clock today.
Today's Thursday, right? So yeah. We are okay, right about here.
Yeah. Is that it? That looks like a.
No, it looks like
that's next week.
Yep.
Bring it in right to today's.
Just
Thursday.
so people who look at the trade idea can see that it's
all the way in. All the way in.
Keep
all the
going
way in.
Right. Yeah. Because that's next week. You've got.
Oh, okay. All
so
right.
we want to do it for the close tonight.
I'm on a 2 hour. That's why I'm.
Yeah.
Yeah. You know what? Let me go to the 1 hour because this way it'll look better here.
Oh, the trade idea doesn't look as good now.
Well, it still holds.
Yeah.
It still holds. So right about here.
Then it tells you what your P&L is properly as well. So
yeah.
I like that.
Well, it's still 2.45. Yeah.
Nice.
So yeah. So let's see what happens with that.
Okay. Good luck.
Perfect. Okay. So day ahead, and pretty crucial today because we are looking at this CPI number at 1:30 UK time today. So expectations are for an 8.1% number on the CPI. And remember, strong data would reinforce the Fed's hawkish message and tend to reinforce dollar strength, while weaker data would provide at least initial relief for risk conditions. So keep an eye out for those numbers later today, likely to create a significant amount of volatility, I'd suggest. Tomorrow we've got retail sales, and that's pretty much that for today, gents.
Excellent. Looking forward to it.
Yeah, so be careful out there, guys. Have a great day, and we will catch you tomorrow.
Tomorrow it
Excellent.
is.
Cheers.
Cheers.